That's fine.
Okay. Well, again, good morning, everybody. Thank you so much for joining us. We are here to talk about nonprofit funds at Essex County Community Foundation. My name is Stacy Landry. I'm the Director of Strategic Giving and Gift Planning. I will be co-hosting this rodeo with Jen Mayo, who I'll let introduce herself right now.
Hi, I'm Jen Mayo. I'm the Assistant Director of Gift Planning and Advisor Relations at ECCF. So I work with Stacy on the fund opening side, and we are excited to have you this morning.
Yeah, thank you so much again. And we've got some other ECCF folks here and some familiar names, some new friends. That's wonderful. I think really just before we dive in, today is really about giving you an overview around this particular type of investment product that we are really excited to extend to the nonprofit community. We also recognize that on this call right now, there are lots of different nonprofits at the table. There are small ones, there are big ones, there are those of you that are here perhaps just exploring this concept. There are others that are here, perhaps you have an endowment or a reserve fund invested somewhere and you're looking for a new partner. All of that is to say that every fund is different, every nonprofit is different. And our intention today is give you sort of this broad scoping overview of what we do, but then knowing that should you want to continue to move forward, that this process is very individualized from here. So I just don't want it to feel, sometimes it can sort of feel like, well, that doesn't sound like me. Well, we're happy to continue on an individual basis as well. Like I said at the very beginning, we're going to hold a lot of time at the end for questions. I will ask you to hold your questions until the end, or if you're just kind of like me and you need to get it out of your brain or you'll lose it, go ahead and put it in the chat and then we will work through that at the end. So without further ado, let's just move forward. We're going to start just by giving you a quick overview and level setting really who we are as an organization. Our mission as a community foundation is to inspire philanthropy that strengthens the 34 cities and towns that make up Essex County. And we do that by pursuing 3 specific strategies. The first is that we manage and we invest charitable assets through the use of 5 different fund types. And really a fund type or a fund, it provides structure around a donor's philanthropy. You might be perhaps most familiar with something called a donor advised fund or a scholarship fund. And today we'll obviously talk specifically about the nonprofit fund, which was in fact designed to support specifically the nonprofit community. We are a growing community foundation. We have more than $120 million in assets with 275 charitable funds, each representative of people, families, businesses, nonprofit organizations, and people in organizations, donors and nonprofits choose to partner with us mostly because of our personal and customized services, our education and access to resources that the foundation has and then shares, and also because partnering with us sort of shows and says that you just really care deeply about Essex County. The second piece of our work is that we strengthen and support nonprofits in Essex County. We believe that an equitable community that's going to bring opportunities for us all to thrive requires a vibrant nonprofit community. And we have one here in Essex County and are incredibly lucky to. We are a grant maker ourselves, and through that process, develop strong relationships with the nonprofit community, which we then introduce to our donors who have these funds with us, who sort of then can pursue their own philanthropic impact through relationships in that way. We provide education to nonprofits, capacity building, most notably, and some of you may be familiar with our Institute for Trustees, which is an annual education conference. The last couple of years, it's been virtual, and it was made up of 25 workshops aimed at really providing insight and expertise to board leadership and executive leadership of nonprofits to help ensure that we're all sort of building the skills and the muscles of running really vibrant organizations. And then finally, we pursue community leadership initiatives through a systems philanthropy approach. So community foundations typically have a superpower of convening. So we convene people, we convene resources and philanthropic resources as well. Excuse me, developing coalitions that will address challenges that we're all sort of facing overall as a county. The most recent example is our 3-year, $3 million investment into advancing digital equity, which certainly goes across every county and every community in the county and every industry. So that's an example of just where we can play sort of a bigger role. You can go to the next one, Jen. But what we're here to talk about today are these nonprofit funds. And we really can't iterate enough how excited we are to take this, idea of this core competency of the community foundation to invest charitable assets and sort of combine it with our mission to strengthen nonprofits. And the question is, what happens when you combine that core competency with that mission? Well, you get these things that are nonprofit funds. So they really are, I think they're an extension of sort of the best of us into the nonprofit community. So getting a little bit more into the nitty gritty, what actually is a nonprofit fund? It is a charitable investment fund to support and sustain medium to long-term operations and goals of a nonprofit organization. It's really important here to distinguish between a nonprofit fund and like a checking account, right? Like these funds and these dollars that you would put in a nonprofit fund are not those that you would utilize to pay your monthly expenses, but instead these are assets that you've connected to a longer term purpose or goal within your organization. And so when you partner with this investment fund within the sort of ECCF community, what do you get? Well, you have access to ECCF's professionally managed investment portfolios, which by design are curated specifically for charitable assets. Our investment pools seek long-term stability and performance with low-cost investment products. And we're going to talk more in depth about that in a little bit. Second is that, any organization that makes the strategic decision to invest assets at any level, it adds to a tremendous amount of responsibility and, quite honestly, administration to the already very full plates of executive directors and board leaders. And so with ECCF, you are essentially outsourcing the investment management, the fund management and administration, which is allowing you, again, to pursue this particular goal or this particular fund type, while also keeping your board and your executive director really focused on more important mission-aligned elements of the organization with ECCF as a partner. And then again, with us, you're partnering with a nonprofit community that's a nonprofit organization that's committed to the same community that your nonprofit is as well. We're certainly focused on the performance of these investment funds. It's obviously a big piece of what we do, but we do so also with an eye on the health and the vitality of your entire organization. And it's our mission and our purpose to do so. And quite simply, you're not going to see that with any other kind of investment partner. So a little bit further into the details of how a nonprofit fund actually works and what it is. So a nonprofit fund is established by the nonprofit who is going to be benefiting from the fund. So your organization would establish a nonprofit fund under ECCF sort of umbrella. Contributions flow from your organization into the fund. Those funds are then invested in one of our investment pools, and then grants only ever flow out back into your organization. So it becomes this really cyclical relationship that exists because we are a 501c3 organization and you are a 501c3 organization. So it is almost this like shifting of assets of under your organization to ours for management and then back. And again, to only ever flow back out to your organization. You can go to the next slide, Jen, sorry. Within a nonprofit fund, there are actually two subtypes. They operate nearly entirely the same, except for the portion related to distribution for the fund. So how money comes out of the fund back to you as the organization, and more specifically, how much of the fund's assets the nonprofit is able to access at any one time. So a reserve fund allows a nonprofit to access the full balance of the fund at any time. It's really up to the discretion of your organization, your board, to request funds as needed. And you can use those funds for whatever you deem necessary. So a little bit more specifically, you have authorized representatives on your board who will email a request for a distribution. ECCF processes that request and sends you a check in the mail. We don't take any expenditure responsibility. That is your money. You decide how you use it. Reserve funds are for nonprofits that want maximum flexibility in how they access the assets in the fund. And they can be also really great for longer term projects. So thinking about a capital campaign that's going to take 3 or 4 years to maybe reach a particular goal, these reserve funds can offer just the flexibility that you need to invest, but also to take the money out as you need it in the long term. The second one is an endowed fund, and that really puts a cap on the annual distribution that a nonprofit can access. That amount, the amount that you can access is calculated annually based on our spending policy, which right now is 4.5% of the average fund balance over the preceding 20 quarters, or the amount of quarters that the fund has been in existence. So at the start of ECCF's fiscal year, we run a calculation based on the spending policy, which determines the amount of distribution the nonprofit can access. And you will have, and you can request distribution in the same exact way. The idea behind an endowment is that the nonprofit is creating essentially a reliable source of income forever, right? And we limit the amount of cash that you can get out, money that you can get out, so that that initial investment, that seed, if you will, the core of that ultimately grows over time. And that's why we put a limit on how much you can access in a given year. In both cases, it isn't mandatory that a nonprofit request distribution. You don't have to request it if you don't need it. And for an endowed fund, any annual distribution that's been calculated that you don't use within that fiscal year is actually reinvested into the balance of the fund. You can go to the next one, Jen. We'll continue to sort of dive in here into the details of how the program works and what we offer. But again, you'll hear us talk about really ECCF as your investment partner. And nonprofits find value working with us because we really help to navigate the complexities of what we consider really the entire investment program, which has to consider certainly the investments, but also needs to consider the management or the administration behind it. And then also this idea of mission alignment, right? These are charitable assets that more and more we see donors asking questions about what are you doing with your assets and where are they invested? And so when we come to the table really thinking, calling ourselves your investment partner, our job is to make sure that these three elements are working harmoniously together all the time. And so with that, I will turn it over to Jen.
Thank you. I will go through a little bit more detail about the product specifically and our investment strategy. So one of those buckets we saw is ECCF's investment expertise. A nonprofit fund, the way I like to think about it is we are, ECCF is investing over $120 million of charitable assets. We've been doing that for over 20 years. So we've built up this investment expertise over time. We've created these curated investment pools. And a nonprofit fund basically is our way of extending that expertise to the nonprofit community and saying, hey, come join us and invest alongside us because we're already doing it. We already have that expertise and we're already doing it in size, right? Doing it in size means we're getting leverage, economies of scale, right? Access to more investment products that may not be accessible to smaller nonprofits. So that's really the way I like to think about in nonprofit funds. Our investment expertise, so our investment strategy, again, you've heard this a couple of times, but we have $120 million of charitable assets under management. Our investment committee is comprised of professionals with over 100 years of combined investment experience that manage to a board-approved investment policy statement and create these pooled investment funds to specifically target long-term, steady, stable returns, managing risk and cost. But it's important to note that the investment committee is we're not stock pickers, right? We're creating these investment portfolios made up of mostly low-cost index funds, but the investment committee creates the diversification strategy and manages the portfolio to that diversification strategy. So currently, we have two pooled investment funds, a general fund and an ESG fund. And I'll go into the details of those in the next slide. But I think it's important to note here that those pooled investment funds give our donors and our nonprofit funds access to a diversified investment portfolios that have been managed, are professionally managed, are managed for the long term, are managed to seek and preserve real purchasing power, and are able to access investment products that may not be accessible at a smaller investment level. The cost of investments at a $2 million endowment versus $120 million, or the type of investments you can get access to. For example, our general fund has private equity investments in it, are different based on size. So what are our investment portfolios? I mentioned the two of them, the general fund and the ESG fund. The general fund is a very standard global balanced investment strategy with a small percentage of private equity. Right now, it is comprised of 65% equity, 35% debt products. Its 3-year return is 7.5% versus a benchmark of 6.43%. And again, here I would reiterate that, our investment strategy is to maintain and grow these assets. It's not to hit home runs every year. We're not looking for 20, 30, 40% returns. We're looking to seek the real purchase, to maintain that real purchasing power of the assets over time. And you can see that, in terms of we are beating the benchmark, but it's still a conservative investment portfolio. The ESG fund has a similar composition of 65% equities, 35% debt. However, it's comprised of funds and managers who invest in companies that focus on ESG portfolios, environmental, social, and governance. And so it's proactive, socially responsible investing. And you can see there that, the 3-year return is just a slightly lower than our general fund at 7.49%. And I think it's important to note that we hold our general fund and our ESG fund to the same benchmark. So even though our ESG fund is comprised of funds that are doing socially responsible investing, we don't expect them to have a different return threshold than our general fund. And this gets back to Stacy's point of mission-aligned investing as well. And we're really proud to offer this ESG fund for our donors and our nonprofit fund holders who are looking for that mission-aligned investing. So we touched on fund management a bit, but this really focuses a lot on continuity, right? Nonprofits benefit from the continuity in the investment program and support for the organization overall. So it comes from two different sides of the coin. Having a nonprofit fund with ECCF allows the administrative burden of managing an investment portfolio to be transferred to ECCF, freeing up capacity at the executive level, the board level, the finance committee level, the board treasurer, et cetera, to focus on mission fulfillment. And so by having a nonprofit fund at ECCF, your investment portfolio is already constructed. You get the monthly investment portfolio performance report. ECCF supports the annual audit requirements and reporting needs. And you have 24/7 online access to your fund balance at any time through the donor portal. On the other side of the coin, a nonprofit fund at ECCF also offers this capacity building. So we've mentioned the complimentary registration to the annual Institute for Trustees. The nonprofit fund holder will have an assigned relationship manager. So questions are just a phone call away. We are here at any time. And you'll have a dedicated representative to you. We have ongoing capacity building and educational events. And we also have the ability to enhance your endowment fundraising strategies through our ability to accept complex gifts such as non-cash assets, cryptocurrency, et cetera. So what does all this cost? We think we have really competitive management fees. There's 75 basis points on funds under 1 million. 50 basis points on funds between 1 and 5 million, and 25 basis points on funds above 5 million. And these cover all of those things that I just went through on the previous slide: administrative costs, access to the donor services support team, the donor portal, the ECCF Institute for Trustees. But the most important thing to keep in mind here is that accessing an investment portfolio costs money regardless. You're going to be paying somebody to manage an investment portfolio on your behalf. Fees paid to ECCF are a reinvestment into Essex County and a reinvestment into your community because they support our community leadership efforts. So I think that's just very helpful to keep in mind when thinking about the management fees. And I'll turn it over to Stacy to talk about mission alignment.
Yeah, and you've heard flavors of this already throughout, but just really understanding that as nonprofit organizations, we all have missions to achieve. We all have relationships with donors and funders and community, right? We ultimately end up being stewards of these community resources. And that's something that we at ECCF talk about, quite a bit. Thinking about how your assets are invested is a conversation that if it hasn't already come up at your board, it likely will soon, and conversations with your donors as well, right? Especially if you are in the phase of raising money specifically for an endowment. Donors are going to start asking you where those assets are invested, sort of given the state of the world, if you will, right, in a broad brush. And so through ECCF and just the ability to access those ESG funds, it just ends up being really a simple conduit into your ability to at least make sure that you are, investing in a way that is in alignment with your mission, that isn't doing harm in a community that you're ultimately trying to serve. And as Jen just mentioned, the fees are coming back to ECCF, which we are a nonprofit. It is a source of earned revenue for us that allows us to do all of the things that we do, not only just that we've talked about in this presentation, but beyond that. And to Jen's point, again, you're going to be paying fees somewhere, so why not back invest it into the community that you are? And then again, this idea of just this really incredible natural mission alignment that essentially you're saying, we're investing in our local community to better our organization. And what does that really say about you as an organization? That's a really powerful story to tell in the way that you make decisions overall. And so we'll just leave you with a quote that was offered by Dick Sundberg, who is the board president of Essex County Habitat for Humanity, that has been investing the assets. They have both a reserve fund and an endowed fund here. Really just saying, even more so, hammering home the idea that they wanted ECCF to manage the assets so that they can concentrate on their mission. We've talked about that. We wanted a trusted institution to be the custodian of our funds. That the fees that they're paying are reinvested back into the nonprofit community, and that there are learning opportunities overall. And so I think we've probably drilled those points home over and over and over again. And so hopefully with that, we've left you with, we've answered some questions so far, but now we welcome you to ask away as you might have them. And Jen, you can, unshare. I do see, I think, 2 questions in the chat really quickly that I can address. The first one is, can others give to the nonprofit fund unrelated donors? The answer is yes, kind of, in some sort of situations. So the natural sort of flow of contributions into a nonprofit fund, as we said before, the contributions start in the nonprofit, they flow into the nonprofit fund, and then they go back out to the nonprofit. The reason why that's important is because when a donor, it keeps the donor relationship with the nonprofit organization, right? And the nonprofit organization ultimately is held accountable to the intentions that the donor had upon making that gift. When that relationship sort of skips over the nonprofit and goes right into the nonprofit fund, we then become sort of the steward of the intention of that donor. And so we like to just keep that where we can. On that side of it, it just makes it's a more natural, I think, occurrence of where the relationship sits. However, as Jen mentioned, if you have a donor who is interested in, donating perhaps a complex asset or something that your organization isn't able to accept, then we'll talk about that on an individual basis. Some things we're going to think about are, are those assets meant to sit in the fund long term, right? We don't want to be sort of like a broker of securities just coming in and coming out, but 100% we can talk about how we can lend those back office capabilities as an organization to the nonprofits. And then I'll get to you in a second, Joe. I just want to read one more. Yep. So it says, is this program available to non-Essex County nonprofits? The answer is yes. I mean, the beauty of community foundations is that we bring a level of local expertise and connection to your local, like in your local community. So while there isn't a rule that says you couldn't work with ECCF if you're outside of Essex County, and if you just like so loved us and so wanted to, like you could, I would also encourage you to maybe talk to your local community foundation who might offer a similar product, just because there's going to be a depth of a relationship there that's going to be really exciting. So there's another one in the chat, but before we get there, we'll go to you, Joe. Go ahead.
Just to go on that first question,
Yep.
If I make it known, I'm a charity, and I make it known to a donor, hey, listen, I have this fund at ECCF, and I make it clear, so the relationship still stands, is that, yeah, it's our pool fund. So instead of me giving to you directly, you just cut out the middle and just go straight. I think it would be okay if you had a letter saying to that, we have a pool fund. So it makes it easier for all parties, instead of going 1, 2, 3, to generate and tell those unrelated donors, hey, we have this, especially on a capital campaign, and then shift it over. And then I'm always thinking on the tax side. So if it goes into ECCF on the when it comes out, it really comes out as a support calculation. It doesn't harm you. It actually helps you because it comes from a community foundation. So
Sure.
if you're very upfront with this unrelated donor, I don't see having a problem unless there's something that ECCF has that says you can't do it. But I would find it as a great vehicle for a capital campaign, saying, hey, we have a pool fund right here. Instead of making the check out to us, make it through our pool fund.
Yeah, and I said, is that Britt? Did you just write a comment? Are you here, Britt? Oh no, so I think that, like I said, the natural kind of structure, the way that these are set up by the IRS is just that we maintain this relationship that is different just because of a 501c3 to a 501c3, right? The way that these funds ultimately, like in a reserve fund, these are really assets of the nonprofit organization all the time, right? They sit on the books of the nonprofit as an asset. They sit on our books as an asset and a liability, because ultimately it's really just an investment management relationship ultimately that
Gotcha.
it isn't a full transfer of assets, right?
Gotcha.
So we like to, as much as possible, just sort of keep the assets and the donations coming directly from the nonprofit, but we also recognize that in some of these bigger campaigns, there may be capabilities outside of a nonprofit's ability to accept those gifts that we can talk about, right? But nonprofits know how to accept cash. They know how to accept even securities in some degree, but some of these bigger picture or larger, more complex gifts, we'd be willing to talk about that. So it's always it depends.
Pooled is a little different than a DAF. Okay.
Yes,
gotcha,
it is.
Gotcha.
Exactly.
Gotcha.
Yes.
Yeah.
Okay. And then there's one more question in the chat. It says, what are the first steps to starting a nonprofit fund with ECCF? And is there a minimum amount to start? Excellent question. So there is a minimum. Our minimum fund size is $25,000. It's also a minimum fund balance that we require is maintained within the fund. To start the nonprofit fund process, you would have a conversation with either me or Jen. Ultimately, what we would ask you to do is complete a nonprofit fund agreement, which we can follow up with everybody on this call, just so you can see what it would be. It's really sort of a simple, straightforward form that's going to ask you to answer the questions of everything that we've talked about today. What investment strategy, what distribution strategy, who are your authorized representatives? And really then it's a process of just completing that paperwork, making sure we're all on the same page. And it can take, ultimately a couple of weeks. And then we can be up and running. And that, I think I answered the question. So does anybody else have anything else?
I have a question on the investment side.
Sure.
I can see why you have a reserve and endowed fund. That makes a lot of sense. How are they invested? The reserve fund must be invested much more conservatively, I assume, than the endowed.
Well, so each nonprofit fund, right? Each nonprofit fund is established by an individual nonprofit organization.
Yeah.
And once that fund is opened and assets are contributed, each nonprofit has two decisions to make. One, do you want it to be a reserve fund from which you can access the full balance whenever you want?
Yeah.
Or two, do you want it to be an endowed fund for which you're sort of putting a cap on how much you can spend or you can access on a yearly basis? The second set of decisions that you need to make is, how do you want those funds invested? You get to choose whether it goes into our general fund or into our ESG fund, or quite honestly, a combination of both. And so as Jen spoke, they both, you know, they have their own investment strategy, a 65-35 balanced portfolio. And so the sort of, it's really up to you as an organization. We also offer access to a money market, right? Which, you know, we could debate for days about, you know, the sort of pertinence of being in the money market right now or not. So the investment strategy remains the same, whether it is a reserve fund or an endowed fund. It's really up to your nonprofit, your risk tolerance, right? And what you feel is appropriate.
Well, it would seem though that you're quote stuck with the 65-35, which I think is appropriate for a long-term endowment, but for a fund that's such as reserve fund, where I could be hitting it for checks or balance coming after you the money, 65-35 is a little aggressive. That's just my perspective as an investment person. That's all.
Yeah, Jen, do you want to add anything, Jen?
Yeah, I mean, I think when we think about reserve fund, you know, Stacy mentioned this, but we don't technically think about it really as a checking account. We think about it as medium to long term, so 3 to 5 years. And so, you know, we don't we don't expect it to be acting as having a lot of grants coming out of it on a very regular cycle. And so that's why it fits still into those investment pools at a 65-35. But I hear you, if for something like a capital campaign, right, where you have a time frame and you know you're going to need the funds at a certain period of time, perhaps that's where the split investment strategy could come in, where you put some in the general fund and some in a money market, just to keep some more liquid.
But that so I get to declare that up front.
Yeah, and you can change it. You can change it on a monthly basis. You can change your investment strategy.
And one of the questions, if I have a sustainability reserve, and which I would sounds like an endowment to me, and I also have a capital operating reserve, which is probably has excess funds, can I have 2 accounts to maintain that accounting?
Yes, you can. You can. Yes,
often.
Yep. Yeah, and like I mentioned, because each of those, to your exact point, the assets that are in an endowed fund have a different purpose than the assets in a reserve fund, right? Ultimately, so they really operate in 2 different ways. There are also organizations that say, you know, an endowed fund freaks me out. I just want to like have a reserve fund, but I want to operate it like an endowed fund, like operationally within our board, right? Because once you put in an endowed fund, you're really putting parameters around it. You're asking ECCF to help you manage it in that way. And it can be difficult to unlock, right, in that sense. I'm going to invite Britt in here really quickly. He's our CFO. He has a really, like, I think, helpful way of showing where these funds sit on your overall asset stack.
Well, I think, I think you have to think about this as kind of a long-term investment and not to a checking account that you're going to be asking us for money every 2 weeks or something like that. Really, this is a 3 to 5 year plus horizon. And from the investment committee, we do think about, long-term capital appreciation, preserving the assets, and really kind of thinking about this, that even though it's a reserve fund, it's much lower in your asset stack. It's not up in current assets, current liabilities. We're really thinking it's lower. Now, from an investment perspective, we are investing this pool with people who have reserve funds in it as well as endowed funds. So we look at our spending policy at 4.5% in the endowed piece, and then look to beat the pace of inflation on top of that. So that would mean that we are preserving capital, providing for current spending needs off of an endowment, and that's how we design it for the long term. I see a question in the chat about a 50-50 split. We think 65-35 is kind of the right way over the long term. Most recently, we've had problems bumping up against the 65 because equities have done really well, forget this year, but before that. So we find, but we need the balance because we got to provide current income for that 4.5% spending, but we also want to keep pace with inflation. And so you can, on a 50-50 split, try and balance it with a money market as well. but we are 65-35. That's our hit.
Great. Thank you, Britt. Paul, go ahead, ask your question.
Hi, good morning. Can you hear me?
Yes.
Yeah, good morning. Thanks. Thanks for doing this. So a couple of questions. Which benchmark is used?
It's a composite benchmark that is, Britt's laughing at me because I'm just
No,
gonna
it's
sort
good.
of-
You know, no, keep going. You got this.
No, go ahead, Britt.
It is a composite benchmark, and we weight it the same way. So we have the S&P is the majority of the 65%, which also includes the Russell 2000 because we do, as well as an international component, and they're weighted that way. So I think it's like 40% on the S&P, 20% on the international equities, and whatever the remaining, like 5 or 10 on the Russell. And then we also have a fixed income component with a Bloomberg Global Aggregate and a Bank of America US High Yield benchmark. So they're weighted the same way, 65-35, and then they're split. So we look at it based on that benchmark. So the indices, and I can help you if you really want to get into the indices and how they're weighted.
That's okay. No, that takes it to where I wanted to understand it.
Okay.
So thank you. So on the website or off of the website, is there a prospectus available and a report on fund performance available?
Yes, absolutely. We'll send an email around to everybody, but if you navigate on our page, you should find an investment management page where we post our monthly performance reports for both the general fund and the ESG fund. But we'll send links to everything after the call as well.
Okay.
But Paul, I do want to say one thing. We won't have a prospectus because we invest in the pool that invests in the securities. But when you get that investment, you can see the list of all of the equity and fixed income funds that make up the pool. If you want to dive into each one of them, those prospectuses are out on their website. So like the, PIMCO income fund,
Right.
you can go get that prospectus out on the web.
Understood. Thank you.
Yep.
So I understand about the ESG fund, but I wonder if the socially responsible investment filter is also applied to the investments in the reserve fund.
So again, just to make sure that we're sort of distinguishing sort of between the two things, the reserve fund and the endowed fund are really subtypes of a nonprofit fund. So when you open a nonprofit fund, you get to determine whether it's going to function as a reserve fund or function as an endowed fund, which just determines the amount of distribution you're allowed to access on an annual basis. In either case, you're going to get a chance to choose whether your assets are invested in the ESG fund or the general funds.
Mm-hmm.
Just to clarify.
I guess, so I understand, basically, thank you, Stacy. I basically understand that. Let me ask the question a different way. If there was a finance committee of a board that wanted to be assured with evidence that any funds invested in any ECCF funds were invested in a socially responsible way, and if they went below that and said, in terms of fossil fuel company investments, or today it's gun manufacturers, people looking at it and so forth, could the finance committee be assured that socially investment responsible filter is applied to any investments of the charity's money?
So the answer to the question is actually no. In the ESG fund, I would say yes. But in the general fund, the answer is no, because the general fund takes a broad view. It's a standard general fund.
Yeah.
And so we don't apply that screen to the general fund.
Okay, I understand.
So the general fund would have tar sands, alcohol, tobacco, and firearms, stuff that you wouldn't find in the ESG fund.
Understood. Okay, good. I expected that was the case, but
Yeah.
I wanted to, because I expected that to be the case. And the last question I had was, setting aside for a moment, just so I can get the question out, setting aside the value of being able to attend IFT and that you're keeping money in Essex County by making the investment in ECCF and so forth, and you made the case about both of those. Setting that aside for a moment, finance committees are going to look at this presentation and this opportunity against, for instance, a Merrill Lynch. And ultimately, just like we do with our own personal funds and investments, we're looking at expense ratios, we're looking at expertise, we're looking at how broad a portfolio it is, and so forth. So setting aside those two things I just called out, what would you want a finance committee to know what the competitive advantage is to invest through the ECCF funds rather than go to a Merrill Lynch?
I mean, I think, one of the big things is that you're investing alongside a 501c3 entity that is investing and specifically investing for charitable assets, right? So the assets that are being chosen are really being thought about for this long-term perspective to really maintain the assets with a healthy growth, but not to kind of hit the ball out of the park with a lot of risk. And yes, an investment manager can also do that. However, investment managers kind of come and go, and board chairs come and go, and investment strategies move around, and potentially a new finance or new treasurer comes into the board and they don't like the investment manager or whatever. There's just a lot of relationships that can change over time. Whereas with ECCF, we offer that continuity in that investment strategy because we have that board approved investment strategy statement that our investment committee manages to. And that also allows continuity from the nonprofit's perspective in terms of as, board members change, executive members change, they still have that relationship with ECCF that's continuing that investment strategy over time. And then I think the last thing I would say is, what are you getting when you're paying a Merrill Lynch or an investment advisor to build a portfolio for you? First of all, are they going to ensure that they're investing in as low cost of investment products as possible? Or are they going to be putting you in maybe higher cost mutual funds that, potentially are run by their own firm, things like this? Just the independence of our investment committee, I think, is a big thing where they don't work for a firm, right? So they're not looking at specific products because that's what their firm is pushing. The other thing is, you're paying fees anyway. You're either paying it to a broker to build you a portfolio, or you're paying it to us to come alongside with our investment strategy and get access to it, but also get access to all of our other capacity building and administrative functions.
Yeah, it's and just one. Yeah, go ahead.
Can I give you a kudos, Paul? I think I've worked with. I'm a CPA and I 36 years in the not-for-profit business. A difference between what I call the commercial Fidelities, Vanguards, and all those is that you're working with a community foundation, and that's a big difference. Community foundation was set up years ago, hundreds of years ago, for their communities to help the organization in their community. So I don't think you get that local feel when you go to a commercial, one of the big guys, because they don't have that customized local look into it. It's basically from a standpoint of where they're functioning. They're looking at the local geographical community, whereas one of the national ones does not have that same kind of parameters. So it's to me, I like using them and like recommending them because they have the pulse of the community. So they know what's going on a lot better than if you go into a higher commercial type. I'm not knocking them. I mean, obviously they're successful, but I just think if you want a local partner, you go with a community foundation.
Yeah, and Joe is, a plant, but not a plant, right? Like he comes to these things all the time because he is a big referral partner to us. I think the sense of it, Paul, is just this, it really is just a total package of who we are as a community foundation. And it depends on whether or not your board values that versus sort of maybe something that might be maybe a little more customized on the investment side of things, right? Versus all of these other benefits that we bring to the table for partnership, for connection to. community, you know, some of the things we sort of dream about going forward within our nonprofit fund cohort is looking at specific skill building around things that you all are specifically dealing with. Like, how do you build your capacity to fundraise for an endowment, right? Like, what does that look like? We are here in partnership, right, all the time. So this is a very sort of dialogue benefit based, you know, organization or partnership that we offer. And then just very tactically, the last piece is just that idea around accepting complex assets, right? If that's a benefit that is important to your organization, that can be a really large administrative burden on an organization, we can help that too. So it is really, I think, just connected to what your organization needs and values.
And Paul,
Great question. Yeah.
Yeah, Paul, regarding your social governance, I mean, I would look at it as board. Are you working with, who are you working with in the community? I mean, I think that working in an organization that you partner that works in your community, your background, is kind of a social governance and environmental. So that's the way I look at it when I look at community foundations.
So I'll close just by saying I know a number of ECCF staff on the call, and I don't want you to think the nature of my questions reveals my own point of view or my own bias, which I've not revealed to you this morning. But I appreciate the thoughtful responses to the questions.
Of course. Oh, thank you for your thoughtful questions. And just looking really quickly, I'm balancing both the time and the questions in the chat. So it says, how large is the investment committee at ECCF? Britt, are we at 5 right now?
Sorry, I got,
We have a couple of new people. That's why I'm asking. And quite honestly, looking at overall as an organization, investing very deeply in pursuing, you know, racial equity within all of the work that we're doing, from our grant making to certainly our investment strategies. It seeps into every single thing that we're doing as an organization, and as well in our investment committee. So we have some new folks who we think are bringing a different kind of perspective based on lived experience and their professional experience as well. So 6 total. Okay, cool. And then which broker do you use?
actually, we don't use a broker. We use our clearinghouse is, or our back office is through Greater Horizons, which does all of our some of our back office finance, but we don't have a broker. So we can invest directly in institutional shares through them, and we piggyback upon their $3 billion in assets to get institutional shares as well. So we don't have a broker.
Any other questions? These have been very thoughtful so far. Anybody? Okay, well, thank you all very much for attending this morning, for your great questions, for your time. As I mentioned, Jen and I will follow up with an email with some just information that sort of help you follow this conversation a little more deeply. As we anticipate with all of these conversations, and as I mentioned at the beginning, we recognize that your journey is different than every other journey. And so please don't hesitate to give us a call to talk about specifically what you're thinking about. We present to finance committees, we present to boards, we do all sorts of things just based on what you are thinking. So we're here as a partner, and whether that's now or in the future, we are here. So thank you so much for the amazing work that you do in the community, and let us know how we can help. So thank you. Have a great rainy day.
Thank you.
Hi, everyone.